Lots of geopolitical risk out there. Which one is the most important?
The markets in the world well understands the current conflicts that are underway, whether it's Russia-Ukraine, whether it's in the Middle East, whether it's other categories of tension. We would watch out for things which haven't quite boiled over yet, but could well do so in the coming weeks and months. Look at the border between India and China. India has committed to an increased troop number at the border. There's lots of infrastructure, military infrastructure built up on the border as well. That could lead to a bit of a flashpoint, and also the Korean Peninsula as well. You know, the world is getting more furtive, it's getting more restless, and I think that's the perception that whether it's China, Russia, Iran, they're not comfortable with the status quo. They feel like it disadvantages them, and that's going to lead to attempted pressures and in a coordinated fashion on that status quo in their regional hegemonic areas.
So are there trading opportunities? Should you be buying defense stocks, for instance?
That's a really great question. It's something that we debated internally at Manulife over the last few weeks. The challenge of looking at US defense stocks is actually the defense budget is not growing very fast in the US, 1 to 2% per annum. And at the same time as well, there's a lot of conjecture about whether that military spending should be better used towards ammunition rather than platforms. So actually, the defense stocks may not be the best way to play it. We like the idea of expressing geopolitical views via gold, via crude oil, commodity exposures, which would definitely come into supply constraints should conflicts start to broaden out.
And in terms of particular markets, would a market like Singapore, for instance, which has proven to be stable, do well under such circumstances? In terms of markets, what would you be looking at?
Well, typically speaking, open economies that are dependent on global trade and the free flow of global trade would definitely be under pressure in a situation where global trade was significantly disrupted. We don't necessarily see that as a near-term risk, but certainly speaking, longer term, if we believe that just geopolitical tensions are here to stay and potentially rise further, we prefer economies that are more driven by domestic economic drivers, secular growth stories, rather than being totally dependent on the global economy and economic fortunes.
Some also point out that the risk lies in what's happening in November this year, the election in the US. Does it make a difference who wins?
It doesn't necessarily make a difference for markets, because I think now that there's bilateral view that running very large fiscal deficits is the way forward. Fiscal conservatism has been marginalized as a political faction in the US for some time now. Both Trump and Biden are in favor of running large fiscal deficits. Now, how they get there is different. In Trump's mind, it's about cutting taxes. In Biden's mind, it's about increasing spending and redistributing. So ultimately, the outcome is the same. It's supportive for growth. It's supportive for inflation. I think foreign policy, both in terms of style and potential substance, is where we could see differences. I think the Biden administration has been very strong on building alliances and reinvigorating alliances, where I think Trump is much more of a disruptor and questioning historical allies in terms of their commitments to defense spending. So the headline risk will definitely be higher under a Trump presidency, but from a domestic economic perspective, there's not a great deal of difference between their instincts.
How about in terms of the Indian election happening mid-year? It is a gimme that Modi is coming back to power. Is it tradable? How do you position for that, especially for a market that's going gangbusters?
Well, given that the election and the vote counting tends to run for 4 to 5 weeks, you've got this window where there's somewhat of an uncertainty. So yes, Modi is likely to win again, but what is the margin of victory? What is the mandate? If there's any loosening of that mandate, a weakening of that mandate, yes, there might be a bit of a pullback which creates an opportunity. But in general, we don't see any pullback as being significant and lasting for a very long time. There are very, very strong commitments from foreign investors towards the India story, because they like the continuity of policy, they like the economic policy program, the rebuilding of infrastructure, the domestic investment that's going on. And that's a very strong story, particularly in a world where there is a high degree of uncertainty and cyclicality that we've observed.